This is your last margin call with your host, Beck and Tim. Our topic tonight is trade management, and once again, I'm not allowed to partake because someone has to be responsible. So I'll tell you what I'm drinking tonight instead. A vodka water because I need to get the job done quick. Go get it, boys. I'm out.
Now this is podcasting.
Thank you, Bear. All right, so our topic tonight is trade management. This is coming to you based off of everything that we got from Twitter, and it's the hot topic this week. It's always the hot topic every single time there's a sell-off that happens. It's just what everybody preaches, and everyone resorts to the motivational quotes. Just here's what you should do in times of a sell-off. We sit on our hands, we do everything, but we want to dive into the actual things of what a trade management should be, what it should look like, and some of the criteria that we're doing. But just as always, since we enjoy having a few drinks while we do this cast, I want to know what everybody's drinking tonight. Andrew, tell me what you're drinking.
Cheap shitty wine and a barbecue chicken. I'm not drinking the chicken, I'm not eating the chicken, but it's like a big part of what's going on tonight.
In Canada, they just blend up the whole chicken and drink it.
That's disgusting.
Too much. That's what we do over here.
It's the most
Keeps us warm.
It's the best way to express deliver the calorie.
And Bear, what are you drinking?
I'm drinking the same cheap Sam's Club rum. And instead of Coke Zero tonight, I bought myself a Soda Stream and made Diet Cola.
Ooh.
And it's pretty garbage, but it's saving me like 8 cents per drink. So, suck.
It's well worth it.
That money management.
Yeah, money management, trade management. Way to play into the podcast here. I'm liking that.
Well, you're welcome.
Harrison, what are you drinking?
That's my tequila song, Tim.
I like it. There you go.
I'm drinking some good tequila. Not El Toro. You actually would say, I don't want to tell you what it is because you could probably buy like 12 bottles of El Toro for the price of this. So I'll just keep it at that.
That's a lie. Tell me what it is. I have to know that. Everybody wants to know what it is now too. So
no,
just go ahead. We need to know. You can't just end on a cliffhanger like that.
Well, it's Clase Azul. It's pretty vanilla-y and sugary, so it's very good to sip on.
Is it like smooth and sweet?
Clase Azul.
From the Himalayan mountains.
Just imported.
Only the finest.
Right. Some poor little boy dragged it all the way down for your pleasure.
Orphans. Only orphans.
Orphan-made tequila has been proven time and time in blind taste tests to be the best, so, you know.
All right, I'll tell you what I'm drinking tonight. Actually, so they have this new prickly water out that is a ginger peach, and it is to die for.
Static TV water.
Static TV. All right, we're going with static TV.
You say HPV water?
Yeah, HPV water. That's what we're doing.
Sounds like it's to die for.
So, but I think like if you just do like a shot and then you kind of like do 3 parts of that and then throw a tiny bit of lime for a little garnish on there, this shit does right. And it's like for all the women out there listening, this is under 50 calories for a drink. So boom.
Yeah, only woman listening to this is Becky, so watch your figure, Beck. That's what he said.
This is my wink wink moment towards Becky. If you want to fit into that dress later. All right, Jay.
Not only women get symptoms from HPV.
Where are we going with this? I don't fucking.
Did you got something to tell us, Andrew?
Jesus. All right, Jay. We'll let you finish this off. Go ahead. What are you drinking?
I'm drinking some delivered water from my water dispenser. I kind of dripped it into a Heineken glass, and I'm really enjoying this today.
Are you not drinking alcohol again?
Because it's like 10 in the morning, right?
Is it 10 in the morning?
It's pretty early.
That seems just about right.
Oh, it's 12. It's the afternoon.
That's about the time that Tim starts drinking.
Yeah, I usually like about 2 deep at that point, just to kind of deal with some shit.
He wakes up, he rolls over, sees if Miles is still asleep. If he is, he sleeps for an extra 10 minutes. If he's not, he makes a drink before doing.
I would say that's not accurate, but that's actually kind of accurate some days. So we'll run with it. All right. So we have trade management later on. I'll timestamp everything too as well. We have Furu of the week. We have the account challenge update. Ham, I think, joined us this week. We have Bear still doing it. Jay, are you still doing it? Or are you doing it next week?
I blew up both of my accounts.
You blew up both of them?
Yeah.
Okay.
The bib trade and then that nice volatility that happened last week.
Well, we'll dive into that later. But some of the things that we're going to start us off with is the big one. It always happens. Sell-offs happen. Manager trades appropriately, and trade-offs or these huge sell-offs don't matter. It's a big issue. It's a big thing of psychological aspect of things, the criteria to which you need to actually do these things. Does anybody want to just like give us
let Ham just go before he passes out.
Okay, true. We should.
I'm only on like my second drink, honestly.
Okay, all right. But I know you've been dying to talk about this. You told me about this.
Well, I mean, I got pages and pages of stuff I want to talk about.
All right. I do want to hear it all. So we're going to go into it. Do you want to start us off, or would we rather like build into you as like one of these like prize-winning fights type things?
I'm good.
Well, Tim. Okay.
Well, Tim.
So.
Yes.
Let me just think how I'm going to do this.
Yeah, okay. Well, how about this? In the meantime,
which soundboard to use.
Yeah, I know he is. So I knew it was going to be. So
no, okay. All right.
No, he found it. Guys.
Okay, so I think there's a couple different sections of risk management we can talk about. Okay. To start, we'll kind of overview it first. I think there's the obvious, the most important part of risk management is probably your sizing. Mm-hmm. And that's basically how much of your account you are playing at a time. I think everything kind of revolves around that because sizing will kind of determine if you're all in or if you're in too little. And I think that's kind of the main part. Once you guys talk about stupid stuff, I'll come in and then say, nope, you know what? This is how it works. So go ahead.
All right. So let's break this down so we can do this.
Wait.
Oh, okay.
I disagree with your Furu of the week. I thought we already discussed who was by far Furu of the week.
Well, we can't do that because he blocked me. So, and I tried to extend the invite.
I don't care.
Like I always say, I always want to invite them. I want them to come on and be like, nah, or whatever. I give them a little spot so that they can.
But it's like
get some incentive.
Okay. I'll do my own Furu of the week then. We're going rogue with this one. All right, continue on.
We'll do that later after everything.
Okay.
All right. The first main thing, all right, now is the criteria of just what defines trade management, and maybe people, maybe it's a little too subjective. So maybe let's get a little breakdown on like how we define trade management. Is it anything beyond? And this could be ended real quick. Is it anything beyond just how when you enter and exit a trade?
I mean, yeah, it's a criteria of entering a trade. What happens to make you exit the trade, or what makes basically it's entering and exit a trade. I'd say is a good when to exit, when to enter, when to exit.
Okay, so
I mean there's a lot more, but that's basically the overview.
Okay, so let's use that for moving forward of just when to exit a trade, and we'll add it in there, just how to play it once you're in, and then the exit of the trade. I think a lot of people not struggle, but kind of want to hear to. It's the emotional side of actually being in it. I think anybody can press a button to enter and exit, but it's the emotional side once you're in the trade of just what do I do? Oh my God, I'm in. Like, you know.
I have a bunch of stuff to go over about the emotional / behavioral aspects of
only
trading.
2 drinks, folks.
No, only two.
No, are you
I'll
kidding me,
drink
dude?
to that.
I'm just like not good at speaking in general, so you can't.
No, we all just need to drink a little bit more, and we'll all not be good at speaking too.
Okay, listen, you guys.
We only say.
I'm going to the store to get a beer.
I have a lot to go over, like just the behavioral aspect of trading and things, emotional and theories behind trading, why we do things, kind of why we hold on to losers, why we cut winners fast, things like that. pretty in depth. I got some things because I have a lot of things written out over the years. I have a risk management section that I pulled up. This is my secret book.
Ooh, okay.
That I keep my stuff on, so I got a lot of stuff to go over.
All right, well, I'm gonna save that for the prize fight. So for whatever, just so you understand, is like I want to give like just quick little hitters for a couple things. I know people want to hear your take on things, so we'll save you as the prize fight, the end, what everybody wants to hear. So if we could, Andrew, just a couple things. When you're entering a trade, or when you're about to enter a trade, give me some of the criteria that you're looking for, just real quick. I don't want like long explanations on anything.
Coin flip capital.
Coin flip. Are we literally going coin flip on this, or is it just some things to enter?
Bouncing off one of the fibs, Tim, then I'm just not going to take it. That's
But is that really what you do?
No, I don't know. No, for me, and it came up with that question that you posted earlier about like your heart's racing and blah blah blah, and it's like if you're taking a trade and your heart is racing about the trade, then I think your size is too large. It shouldn't be that big of a deal, and if it is that big of a deal, then you're risking too much.
Okay, I'll answer the question you asked then, Tim. So usually what I look into when they're entering a trade, there's pretty much like two things you can do. You can either go with momentum, like where the momentum's just going forward, you kind of ride it, or you look for a pullback slash an entry where you think the momentum will continue going. It's either go with momentum or try to catch the reversal of momentum. I think some of the best trades are when you have the pullback.
So go with either it going up or hope that it turns around and goes back down.
Yeah, I was going to kind of jump into that.
Well, okay. So basically, if you're going with momentum, usually you want to wait for a pullback relative to all the other pullbacks, kind of how far it goes down based on the volatility of the candles, and then you can get a good entry where you think it's gone down enough where buyers will step in. That's the easy one, the normal one. You go with momentum. The other way would be to kind of reverse against momentum, playing into an area of support or something you think there will be a reversal. So those you will lose more than you win, but those are the ones that if you catch the good entry, you could really let them run really far, and you're getting a good play on more of a longer term than just scalp.
I want to ask.
But I thought this topic was trade management and not like entry points, which we argued like two or 3 weeks ago.
No, it's all part of trade management as well. Like
I'm answering the question, Andrew.
Really, you're just ranting about support and resistance again. Like
you asked what I look for to get in a trade. You igloo fuck.
Fuck you.
No, I think that's what I want to talk about. But like, all right, so when people are like seeing this and like a trade management, so let's get rid of that whole thing about entering a trade, and let's say management. You're in, no matter where it's at, no matter if it's at a support resistance, you're in. All right, so I think people want to know, like, all right, so let's talk about so shop is the thing of the hottest topic ever, and healthcare, biotech, all these things are just going rampant. Everyone's like, oh my god, they're so extended, let's do this. They've been in that. How do you know that the first pullback isn't going to be this massive reversal and they need to get out on that first candle that hits resistance? How do they know when shop is, at the RSI 85 and that's way too high and I need to get out of this because this could reverse back $30 in a heartbeat? I think that's what people kind of really want to know, is they can enter at any point that fits their criteria.
I think scalping individual stocks like that is for losers.
But this is what people do.
My response to that is that if anyone could actually accurately answer the question that you just asked, then they would be millionaires. So,
well, it's about managing, though, right?
How do you know when the pullback is actually a pullback versus?
But those are the types of things that people want to know. Like,
that's not the point of trade management, though. The point of
trade management is 100%. What are you talking about?
You're not going to know accurately whether what you're seeing. You need to define your own risk tolerance.
And those are all very personal things. Yeah. So maybe that's what the thing actually goes down to.
I think more relevant to the topic that you're trying to discuss.
So here's one thing. I think there's pretty much 3 strategies or 3 kind of things that I've gone over how you can trade. You can take your winners fast and cut your losers fast. That works best volatile days. You can't really let winners run, then you get chopped out, so you just pick smart entries to scalp. You take your winners when they come, you cut the losers. And then another good one is you cut your losers fast and you let the winners run. And that's more of a trending day. You let the winners run because you probably won't get chopped out. You get a good entry. It can keep going. The thing you don't want to do is cut your winners fast and let your losers run. That's like the one you do not want to do because, usually it works. It will work like 90% of the time if you have like a small winner and a big loser. But, once it goes the wrong way, you're going to lose everything you made and more usually if you don't cut your loser and you just keep letting it go. So that's like you see someone with like a high win rate, like 90% win rate because I'm just scalping, but
take two ticks, get out, take 2 ticks, get out, take 2.
But if you look at their downside risk, it's huge. So if it doesn't bounce back their way, if actually one of the biggest hidden advantages of cutting losers fast and letting winners run is getting news that just pops it one way. Like say you get news and it flushes super hard and you're short, you make a lot of money. But if it popped, you only lose a little. Or if you have you're buying at support and you have a small loser or a small stop out and you get news that goes straight up, you make a lot. But if the news made it go down, you get stopped out. And you don't want to do the opposite of that because you'll be fucked.
All right. So I guess we have the general idea of what should be done, but we all know we've all been new traders and saying like, all right, well, just shut up with the generalized shit and just tell me when XYZ needs to happen and that's when I should be out, and XYZ happens, that's when I need to take profits. Can we actually do that, or is that too?
No.
Okay, so then, and why can't people hope for that type of criteria when doing it? And what happens when someone actually says that's the type of criteria you should have?
Nothing's that consistent that will work like that. Everyone has to have their own style of trading that they figure out. Some people might play things off trend line. Some people might use MACD. Some people might use order flow based closer, volume profile. But the thing that everyone has in common as a profitable trader is risk management. No matter what type of trader you are, every single profitable trader will have good risk management.
And that's true. Like,
so no, I'm laughing whenever Ham messes up a word. I'm taking a drink.
Yeah,
so.
you can find these same sort of systems in professional gamblers. You will see the exact, and not to like make the whole like trading is gambling thing, but I'm just saying like if you actually look at professional poker players, they call it bankroll management and stuff, and it is literally the exact same topic. It's that on a single game you should not risk more than X amount. You're trying to roll deep in a table, etc., etc. The whole point is that you should never put enough on the line that you're going to potentially knock yourself out from being able to take the next one. And when it works for you, you have to be willing to not walk away from the table early and miss out on the profit. So maybe you'll have 10 losing tables and one winning one, but the winning one wins so much larger than the other ones that it works out for you.
I think that even works better in trading because you have the theory of momentum, where things usually keep moving in one direction. So I think it actually works better because in poker and stuff, even though people say there's hot tables, cold tables, it's technically not true because everything is just based on odds. In trading, momentum.
I think the fact that it actually does work for them at all should just mean that it would work even better for a trader.
Yeah, that's what I mean. I think it works even better.
Hold on, can I ask you something real quick? Sure. For anybody that's out there that's like wondering about like what is actually defined by momentum, because you'll have people that say momentum could be the first candle of a breakout, whatever time frame you're looking at, or momentum could be 3 candles after a breakout, or whatever is defined by their criteria. Can you define for them so that they have an idea of what you're considering momentum?
It's everything's relative. So the easiest way would be to look at moving averages. The 20 MA. If you have to look at the length of your trade. If you're doing a longer term trade, then maybe look at the momentum of longer term candles. The easiest way to do that is look at the 200 SMA. If the 200 SMA is going upwards, it's probably not the best idea to short it. The odds are not in your favor there. just based directly off that. There might be other reasons to short it where the odds are in your favor, but that at the base of it, using some kind of moving average gives you direction. I don't like playing moving average bounces very much, except for specific reasons. I think moving averages work better giving you direction.
Okay. I mean, I think the underlying point is that if the S&P 500 is moving up, it's probably moving up for a reason, and it is actually more likely to keep moving up than it is to just suddenly, like, I mean, it can still turn around and whatnot, but like, I agree with basically what Ham's saying, which is, you know, unlike at a poker table or something, or at a roulette table, just because it came up red 5 times doesn't mean it's more likely to keep going red. But the fact that what you're watching is moving up is probably actually based on a reason, and you can look into that reason if you want. But the point is, you probably have better odds following the trend of everyone else who's buying than, you know, being like, oh, it went up a lot and the RSI is 85, so I'm going to short it.
Well, yeah. So I guess a lot of traders out there that I mean, if anybody's like experienced watching us and anyone's trading derivatives, futures, options, anything other like these things, like they probably have some type of experience. Not just this isn't the first day they're trading it and looking for help while they're trading it. So I guess we're mainly targeting the newer audience, the first 2 years traders out there when they do this. When they see those types of things, the RSI is too high, and all these other, and shop, you know, it's like, oh my god, this thing is just rocketed, and healthcare is just rocketed, and they're saying it has to come down. It just has to come down. Like,
I said that about shop when it was at 95, and it's like 200 and something.
Yeah.
Right. So I guess like
same thing would happen to the little boxy boy.
What's boxy boy?
Just kept going. Little boxy boy, Roku.
Oh,
Roxy
Roku.
Yeah. The one that you tried to short, Tim.
Oh, I was green on that trade.
What about that other one?
What's the other one?
Shit, not shop. The one that just went up. I'm not sure if it's still going up because I don't follow individual stocks, but the Square. That thing was on a beast SQ.
Oh, not anymore.
My god, did that thing just keep going up?
Yeah, that thing.
Oh, it was going up forever though, and it had a crazy.
I remember that shit. It was 2008, 18. Yeah.
Yeah.
So I mean, cause that's.
I got a question.
Yeah, go ahead.
Like, so looking at all these like huge moves like shop, how the fuck do I stay in that trade? Say I bought the bottom, how do I stay in that trade? Like, I've got like 4 contracts or something, leaps. How do I just not sell the first pop and I stay in the trade? Because I don't really understand what letting winners run and.
Or move your stops up.
Yeah, my best advice would be on the first big move you're thinking about selling, maybe just sell part of your position and then move your stop up to even. And just, you know, it might be beneficial not to look at it. Don't freak yourself out on pullbacks. Don't look at it. Check back later. And if it's up farther, you can sell one more. And then you can just let it run.
And if you have a platform that's actually not a piece of shit, do your stops for options based on the underlying price and not on the price of the option.
Right. So I guess my take on that whole thing is that's literally all time frame based. Like when you're talking about I have leaps on SQ, how do I not take the first pop? It's like then you need to really dive into your moving.
I was talking about commons because using options is something like this is just too.
I think
there's too many variables.
I think even taking commons. I think if your time frame is anything, if you plan on holding that for a year, you need to be moving on a weekly schedule, a weekly time frame to monthly. You should not even be your month or year-long trade, 2-year-long trade should never even touch a daily time frame. So if your daily all of a sudden gets fucked up, then you can kind of consider that. But if you're planning on holding this for 2 to 3 years, you don't touch a daily time frame. And then that's when you bring in moving averages, because you're talking about a time frame that involves investors, that long-term building positions, and people doing this day-to-day thing. Anything can happen, in and out type of things. So you have to find the stupidest like things to do. Like it's below the 20, you know, like, oh my god, it came below my entry, and then I'll just get in at a different price. That's my take on the whole thing, is that time frames are everything, and use the simplest things when you're looking at bigger time frames, because bigger time frames are simple.
I think I'm going to go into a little bit of the behavioral things of risk management and trading, which I don't really see too many people talk about, and not a lot of people know. I think Barry even asked for a few of these, and I gave him like one, which was loss aversion, but there's a lot more that I have written down here that I've studied over the years. So basically, these are things that are just kind of wired into how we think and how we trade, and this is what makes it so hard to hold on to winners. Basically, what it comes down to is with loss aversion, we don't like losers more than we like winners. Like if you're going to lose $100 or make 100, you're going to be more upset at losing 100 than you will be happy with making 100. So you don't look at them equally. Mm-hmm. So which that means is you will take more risk to avoid a loss. So a quick example here would be, so I'll ask you guys, if you had the option to get $500 for free, or you have a 50% chance of getting 1,000, but also a 50% chance to break even, what would you do? Would you take the 500 or do 50-50 for 1,000?
The 500.
500.
You do that? All right.
Uh-huh.
Yeah.
And the opposite way, if you had the option to just, you're going to give me $500 right now, or 50% chance to lose 1,000, or 50% chance you break even, what would you do?
I mean, literally, I have to pick one or the other?
Yeah.
Then I'd pick the chance.
Yeah, and it's the same exact.
I want to give you $500.
Yeah, but basically, you could do that with other things. You could do that with other things like 90% chance to lose. Basically, what happens over these studies is most people choose to take the money that they have, or take the risk to get the money back because they don't want to lose it. This kind of goes down to letting losers run, because we will keep trying to make a risk to get the money back. But when it starts going our way, we see that money and we want to take it too fast.
I'm with you, baby.
No, I think that's the perfect transition style into everything of just like do people base these decisions off of indicators, and no matter what, as long as they have a plan, that is, as long as they follow the whole thing that everyone keeps always repeating, like it's a fucking mantra that everybody needs to have, is just stick to your plan. Like how many times have we heard that on fucking Twitter of just stick to your plan. Over time, if it's a good plan, it'll pay out, and if it doesn't work out, you know what, you wasted all that time doing it, find a new plan. But if they have an indicator that crosses this thing, whatever it is, it's always a cross, no matter what it is, no matter what indicator it is, it's a cross. If they sell at that point, buy at that point, and they manage their trade according to that point, is that just considered good risk management because they followed a plan that it always happens when this happens? Like, that's something that we need to talk about, because that's what everybody does. When the RSI gets too high, we sell. When the MACD crosses to a bearish thing, we sell. When there's a candle formation we don't like, we sell. Like, these are all things that are repeatedly used.
I think that only works if it's biased to the profitable side, because if you're trading off, like, let's say RSI, then you could enter a trade and have it go horribly against you and still not exit it, just because the RSI hasn't hit that low that you were looking for to say this has gone wrong.
Okay.
So the reason I was going into those other things, though, is because I think a lot of people suffer from different things when they're trading. They're like, why I try so hard, but I can't let winners run. I can't cut my losers. I think knowing the human nature behind what happens and Googling these terms and kind of reading into them can actually like really help. It can, like, loss aversion is a big thing. Just realizing the flaws in humanity itself, kind of how we're wired, actually can really help you make a good trade or make a trade better long term. Just you know the weakness, you know how to fix it. Yeah. There's one. I think the one that this is the one where I think I mess up the most, because I'm pretty good with all of these. I know the flaws behind them, and I think the hardest one for me is, it's pretty much called a regret aversion, where you are scared to cut a loss because you think it's going to go back up, and you'll be pissed that you sold something that just bounced.
Right.
That's one of the most annoying things where I don't want to take my loser because I think it's going to bounce up really fast.
Mm-hmm.
And that one is regret aversion. That one is actually my hardest out of all of these because I don't know if I'm so confident in a trade. I'm just like, I know it's going to go back up. And this causes us to hold losers longer than we should because we want to hope it goes back up. But not only that, this is what causes people to double down on stuff because they're so sure they were right. This is even better deal. And then it keeps going down. And then you're fucked. You lose a lot.
That topic also gets weird, though, when you're like buying the dip, for instance, on a constantly appreciating asset, where it's like the odds are technically kind of in your favor. If you can actually stomach the downturn,
sizing, like we talked earlier.
Yeah, well, we'll get the sizing really, and scaling a little bit later.
There's a good chance that you might not be wrong on that one.
So yeah, in relation to that, I think that I completely agree with you. If you can stomach the downside, usually you'll be right when that comes to sizing. Mm-hmm. But I think there's a difference in this case. I think there's a difference where I start a trade for a pop or a scalp. There's a difference between scaling in versus kind of averaging down.
Buying for the hope.
Right. There's a difference between, okay, I'm going to scale in here because I'm going to slowly buy stuff that's going to go up sooner or later. So I'm going to buy slowly to stomach the loss, like you said, versus I go into my normal position and then double down, where if it just keeps going down for a while, you're going to have to, blow up your account or something.
Yeah, I mean, I can do that a little easier with MES, like with the micros, where it's just like, oh, I'll buy one, and then like if it keeps going down, I'll buy another, and it's like whatever. And then, but I think when you're doing trade management, no matter what the products, relative to your account, there has to be a point where you're just like, I'm fucking wrong, and you cut it.
So I think a lot of people that come on here or come on to financial Twitter and they talk about when you need to be wrong, and I think the general consensus that everybody's come to is when you enter a trade, you have the criteria set. This is a good entry point, and if you enter that trade and it goes against you and it goes the other way, would you still enter the trade at that point when it goes against you? So you're red on the trade. So, you're even, you start off, it goes up $10, and then all of a sudden you're down 50. Even at that 50 mark, are you still willing to enter the trade? And most people, everybody on financial Twitter says, if you're not willing to take that, you're not willing to enter at that $50 mark, that's definitely when you should know you should be out. Do we agree on that? Or do we think that it's more complicated than that? Do we think that there needs to be more set in stone there?
I mean, I think that if negative $50 is enough hurt on your account and you're actually like sweating over it.
But what happens if it's somewhere where someone would still enter there, though?
So again, you're just talking about like entry criteria at that point. Though.
No,
you're saying
no.
Like, oh, no. It went down this far. It didn't break my line, and therefore.
That's trade management, though, and that's what everybody preaches in this sense, that if you would still enter a trade at this point, hold on to the baggage, because you have to have consistency within your trading plan, no matter if it blows up your account or it explodes your account to new highs at all times. So
I could be completely wrong, but I personally feel that like deciding that a trade has gone so far against you that you should get out is based more on the value, like how much you're losing, and not based on, like, that's what I was saying earlier, is like, if you're willing to hold this trade until it goes down so much that it finally hits RSI negative or 20 or whatever, then like that's the kind of shit that can blow you up. For me personally, when I'm judging whether or not I should get out, it's how much of my account was I literally willing to lose. And when it hits that, I don't care if it hit a line, I don't care if it broke this, I don't care if it did that. It's too much. I was wrong. I'm done. Like, I'll enter a trade and I'll be like, all right, I'm willing to lose $30, $50, $100, whatever it is on this. And if it hits that, I'm out. And I don't care about where it is on the chart, what it looks like, whatever. I can't maintain my account and my personal risk tolerance if it's gonna take me down more than this much.
Okay. So Jay,
that's me anyway.
Yeah, no, I get it. Jay, from a different perspective of you, I know lately you've been playing a little bit more riskier than you typically have, and it's been going well for you. Do you have that same criteria, or do you have a set in stone thing where, even if you're down $200 on it, $1,000 on it, whatever it is for you, like you would still enter at that point, are you staying in the trade, or is there different things playing into there? Tell me just a little bit about that.
For my scalps, yeah, I'll go in pretty heavy with I'll buy 4 ES.
Oh, hold on 1 second. Say it again.
I usually, so the last month,
yeah,
I've been taking about 4 ES contracts, and I will risk, depending on my entry, if I buy a sweet support, I'm only giving it 3 ticks to lose.
Mm-hmm.
And I'm going to be taking around 1 to 2 points, 1.5 to 2 points on that trade.
Okay.
If I'm kind of buying a risky dip, I really kind of let it run a little more than 3 ticks, because I don't want to get shaken out of the trade. But those are my less profitable trades, and they're honestly harder as far as my emotions go.
Yeah, so you're 3 down and then a couple ticks up. So, what's the reasoning for that? Why that, of all things? It's just personal risk tolerance, or at the end of the day, it's I don't want to lose more than that much.
I'm okay with having a $500 loss a day where I'm in the red only 500.
Yeah.
Because I know I can consistently make at least 1K a day to recover from that loss. So
yeah, exactly.
That's really where that comes from.
Okay.
Yeah, so I think that's pretty consistent with what I was saying, which is that relative to your account size, you should have an idea in your head of what's the most you can stomach, or what's the most that's that you'll be okay, whatever, and you'll keep trading the next day.
Okay.
If you're gonna take a loss that's so big, if you're willing to sit there and stomach a huge loss, it could completely discourage you from trading the next day.
Okay. Well,
yeah, the hardest part for me is when I'm buying the bull flag and everything, and I think I'm buying the the best support on that bull flag, and it starts to dip on me more. That's the hardest trade for me to manage, because I'm 90% sure it's going to pop again, but am I willing to take the risk for it to just break down completely?
all right, but what do you guys think about setting targets on these trades? They have a lot of people that will say, you on the enter on a breakout, and let's say it's at 50, set your target for 60. Don't worry about any noise until it drops below your entry, and just keep on going up from there until it hits 60. That should be your resistance, and that's when you want to get out of these trades. Do you guys set up anything that's like that when you enter your trade, or what happens with you? Give me a mindset that you guys do. Bear, can you go first with this?
Yeah, so I generally, unless I'm intraday scalping and I know that I'm going to be doing a real quick trade, I don't necessarily have an exit target. I just like playing breaks on trends when I see that there's a volume coming in, and I see that buyers or sellers are pouring in at a spot of contention before. I take the trade there, and then I kind of just try and ride with it until I see the momentum slowing down on level 2, or I see it approaching another spot of previous support or resistance, depending on which way I'm taking the trade. So I would say most of my trades, I've said this before, are longer term, and so that's generally how I play them. When I'm scalping, I kind of like doing it off of a percentage. If I get to a specific, I'm just gonna say an arbitrary number now, but if I get to a 20% gain on a play, like if I'm sitting at work and I take one of those plays and I get 20% on it, I'm going to sell it either way because I know that I could get pulled into a meeting or get a phone call or something like that.
Okay. How often do you find yourself doing that though? Like, is that a common thing that like once I hit 20%, like just give me the gain. I'd rather just take money and be calm and just know that I made money today.
I'm gonna step in real fast. I think it's important to say that when you are, it's nice to hear someone who like has like me, I trade full time, but if Bear is trading, and I'm sure a lot of people are trading with a job, so I think it's important to have different strategies where, this strategy might work really good, but if I get called away for a meeting and I cannot manage it, that you should build around that.
Yeah.
Which Bear does very good.
Definitely. Like 100%,
and it took,
yes.
I lost a lot of what I had made when I switched positions at my previous job and then coming to this new job. Every single time I take a new position, obviously responsibilities change and the way managers work and everything changes. So that's been the biggest learning curve for me because I can read as many books as I want to and stuff about how the market moves, and I can spend time researching charts and everything. But the most times that I've lost money is when I enter a trade knowing that I shouldn't enter it because I need to be able to watch it, and I know that I'm not going to be able to.
That could be a good topic, trading while having a job or something.
I actually really like that because I think I think a lot of people would actually, not only I think that would be like a key like advertising thing, but I think it's what majority of 99% of people do actually, and you get like the 1% that actually day trade, and like they tell people with jobs like, oh, if you could just watch every second of the day, like you could do this, but it's like not everybody has that. I'm actually probably gonna write that down. I think we're gonna do that next time, like legitimately. I think that sounds
I'm all
great.
about it.
I mean, like even
it's a
stay-at-home parent. I know like a handful of people out there that are even on Twitter that are doing that. Being a stay-at-home parent, having a job, full-time job, two-time jobs. Just anything. I think I'm gonna do that. That's a great thing. I'm actually gonna type that down while you guys continue. But okay, go ahead.
But yeah, just to finish what I was saying though, when I'm taking those intraday scalps, I generally have like everybody always breaks their rules at some point, and I break my rules still a lot, and I'm trying to correct that. But I'll take a trade, and I'll usually just exit it when I get a certain percentage, or whatever. If say I want to make $10 real quick, I'll try and do that. But if I don't just sit on that trade until I make $10. If I see it going against me, I'm gonna cut that because it's not worth turning a $10 scalp into a $100 loss because I'm being an idiot.
So what people are going to want to hear though is like when you see that and like you're shooting for a 20% gain and you're sitting at 18%, like what are you seeing that makes you want to take that gain earlier? Is it like, because it's all about managing the trade. It's just like it's not going up as fast as I want it to, or oh my god, there's a wall,
scalps,
or just whatever it is.
I traded off a 5-minute chart, which is usually what I watch during the day. And even when I enter my long-term swings, I do it off a 5-minute chart to try and give myself a better entry.
Mm-hmm.
But I mean, we can talk about that later. That's not to say that that's a better time frame than anybody else uses. That's just what I have found works best for me.
Of course, yeah.
But when I enter those trades, if it is at 18% or whatever, and there's all kinds of things that go into it, but I guess just I try and take those trades when I see something that's really going to move. I know I talk about it a lot. I specifically trade Boeing most of the time when I'm doing these scalps.
Yeah.
And I mean,
for example, Boeing.
For example, Boeing. I mean, even Harrison traded Boeing in his Robinhood account on Friday. So I think it's
it's a good trade.
I mean, it was.
It moves.
And I traded it twice. I wanted to trade it a third time, and this is perfect for this topic actually, because I made a trade and I sat there and I wanted to get a little bit more money on it, but I was waiting to leave work to take my kids to the doctor's office. So I was sitting in the parking lot on my phone waiting to try and get to that, and I was like, this is stupid. I just need to sell it. So I sold it at like, I don't know, I was trying to make like $20. I made like 14. And then when I got to the doctor's office, my wife wasn't there yet, and I was like, okay, this is going the other direction. I can take another trade. And I hopped into it, and then she pulled up, and we had to walk in. And I know that the doctor's office doesn't have service, and I was stupid and went inside, and then like ran back outside, like, oh, I have to get something out of the car. Ran out there, and I was down like $5. I was like, crap! So I just sold it, and then it ran the rest of the day. So
I think that's a whole different side of trade management that is actually real. Like, is the whole day-to-day aspect of things.
Yeah, I mean.
Dude, but if you pick one stock, to trade and you pick Boeing, I mean, my God, do you have a good stock to trade? That is probably one of the best stocks like of all time. The whole buy. It is a godly stock. Dude.
It is because it's just so explosive.
Dude, it's such a good stock, and just the whole thing, America, fucking Boeing, war. Oil. I
mean, it really is. Well, there's better defense industry. There's definitely better defense industry stocks. But the thing with Boeing is that they have the whole commercial aviation side of it, which is huge, which it's been a lot tougher to trade right now with the whole 737 MAX crap going on. Right. But even still, it's just so explosive off of like garbage news. They'll be like, oh, yeah. The FAA decided that pilots are going to have this training that we already decided 7 months ago, but some company arbitrarily reworded it and threw it out there, and then
the algos are like, okay,
yeah, this thing drops $6, and you're like, what is going on? And then another news story comes out where they're like, oh, just kidding, that's the same training that the FAA already said needs to happen, and the thing goes $12 back up. So if you can catch those and ride them, it's fantastic.
Right. But even for long-term holds, if you look at that is one of the most like Disney long-term. That is one of the best stocks like to hold. Like it just is.
Yeah, I would say if you're just gonna long hold a defense stock, Lockheed Martin would be the best one.
Cool. Now you're never getting hired at Boeing after that.
That's fine. Without a doubt, Lockheed. But Boeing's definitely right up there.
I mean, I think historically, if you look at historically, Boeing would be the best, but maybe not now. You know way more about that than me, so I'm not gonna argue that. But Boeing is like long term. My God, if you look at the chart, it's a beast.
Except for that 3-year period where it traded sideways.
Sideways, is that bad though? I think a lot of things we talk about, though, it comes to commons versus options, too.
Yeah, true, yeah. But all right, well, I guess then that's a perfect transition right there in terms of when we're talking about trade management, is scaling is the utmost important thing you could possibly do in terms of what fits your risk tolerance, your account, and more importantly, your account is everything. It's not your personal opinion, your belief. It's just what can your actual account handle, because you may be able to handle that, but your account can't handle that. So what the hell does it matter? So scaling is the next thing I feel like everybody needs to kind of understand, and what can they do to help them out in this regard. What do you guys do when it comes to scaling? Like, is it a certain percentage? Is it 1? Is it always 10? Is it always 5? What do you guys do for scaling? I'll let whoever wants to handle it go ahead. Just start it.
I would say I'm not a great example of that, because mine's kind of just it really, I would say, greatly depends on what I'm doing. If I have done a lot of research into something in the defense industry, and I check the government awards for military contracts every day and stuff like that, and if I see things coming through that I know, like over the next 10 years something's going to be growing exponentially because of awards, I'll pick up a lot more LEAP contracts than I normally would, just based off of a technical looking at the chart. But intraday, how many I take, it's really just dependent. But during the day I usually take like 1, max 2 contracts on things, just because.
Is there a reasoning for taking 1 to 2 though?
Yeah, because I'm at work, and it's just not worth it if I get a phone call, or my manager comes in and says, hey, I need you in a meeting right now. Like, I don't want to risk more than 1 or 2.
Okay, so just personal risk tolerance, not necessarily
100% risk tolerance based off of my life and what's going on.
Do you ever feel like one is too many for you?
I think a lot of times I take too many trades that I shouldn't, and that's something I'm still working on. Just not because I'm wrong on it, but because I know that I'm not going to be able to. I'm entering trades that I know I'm not going to be able to manage correctly because of my schedule.
Okay. And like Harrison, do you have that same point of view, like in terms of?
I mean,
one time,
no,
one could be
because obviously he has other things to deal with. But when I trade, usually if I'm scalping a few ticks, if I'm doing like future scalping here and there, 4 ticks, 3 ticks, couple ticks, usually I just enter my whole position at one contract to contract. If you're like trading such a small range, you don't really want to look for like a place to scale down, because usually when you trade a small range like that, you're trying to get the perfect entry based on the order flow that's coming in. So it's like, if it drops below this level, I'm out. So if it drops below that level, I'm not going to average down. Okay. It's just not smart for the trade. But scaling is a very important part of doing a swing trade or something, where I think if you're swing trading, I do not think you should enter all at once. Yes. The most efficient way would be to slowly scale in on a curve and then slowly scale out.
I agree with that.
Yeah. Like I say, I can't agree more on that. But like, so I guess for a more criteria-based thing here when it comes to this, like, all right, so you've done like smaller accounts with futures and building them up to that. At what monetary level, even if you can tell me like, hey, no, that doesn't even matter. At what monetary level do you feel like you need to go beyond one contract for futures? How about that? Let's start with just futures.
Well, luckily we have micros.
Okay, so
because now you can. It's like micros. What they are 1/10 of minis.
Yeah.
And each mini is thousands and thousands of dollars relative to like a normal stock you'd be buying commons. So minis lets people trade smaller.
So like I guess, so let's say you're opening up just a minis a micro account, and what would you say is the monetary level that you could take more than one contract?
I think it's very relative to what you're trading. If you start off with like $1,000, you can do a couple of contracts, maybe like 3 or 4. You would really have to see what your risk is. I think picking the amount of contracts that you pick doesn't only it doesn't only decide whether you should look at based on the monetary value, money value, but you should also look at the volatility. Yeah. Where if something's moving really fast, you should play less. You should look at the average volatility, and usually I don't really look at a real level. I just kind of look at every single candle, and I'm just used to doing it so I can see how often the candles move back and forth and the range of each candle. Where if something's moving more than normal, then I'm going to play less. But if it's like moving a lot less and very slow, then I'll play a lot more. So that's one thing. It's not only about money, but it's about the volatility too, because the volatility can tell you how much money you should play.
Okay. Break that down to like just like a one sentence thing that someone could refer that back to, of just like when things are moving too much, don't size down accordingly, meaning like if things are jumping high in range.
Two sentences. If your candles are moving a lot faster than normal, you should be, if your candles are having a larger range, you should play smaller. If they have a smaller range, you should play bigger.
Okay. And like, I guess, Bear 2 and Ham, like you guys have done options. Do you feel like that's the same way too as well? I mean, there's tons of different, there's more to it than that when it comes to options, but like
you should look at volatility and how the range your average candlestick that you're looking at, say you're on the 5-minute. Here's like an easy example. Say you're playing the 5-minute chart. You look at the average movement of a 5-minute candle, and from there you can pick your stop. You don't want to have a stop based on like a huge candle that doesn't exist on the 5-minute frame. So everything should be relative to that, relative to the candles you're playing on, and then base your stop around that.
Okay. All right. So that's good. So it's so easy to talk about these things and say like, here's what we should do. Here's what we can do. It's hard to always put that into action and be like, all right, I'm going to walk away from this and I'm going to do this. I'm going to take my trade. And when it goes against my account, tolerance level, I'm going to exit. But, it doesn't always work out that way. And it's a struggle. It's a hard struggle that a lot of people do. What are some ways that we can avoid the things that we talked about? And like a recap of all the things that we talked about, just in case like this is where we all jump to, is we've talked about exiting when it doesn't feel it goes against our account balance, that just too much to take, below our entry, when we don't want to enter a trade like when you wouldn't enter, that's when you should exit as well. We've talked about that. We've talked about just the momentum and volatility of movement of candles can influence a decision on handling it. But how do we avoid all this and not just be like, just make it based on hope, or you know what, my gut tells me to hold on.
I think I'm kind of Ham and I are different examples, which I guess is good. But for me, a lot of the times, like using my stops and where I exit, like when I'm at work, I use trailing stops way more than I do when I'm like. So for example, I have every other Friday off, and when I'm on those off Fridays, if I'm not doing something with my family, then I can sit there and actually watch the charts, and I'll use a much broader stop than I usually would when I'm at work.
Mm-hmm.
But when I'm at work, I use trailing stops because, if I'm on a 5 minutes where I can sit there and watch the charts or something, cool. So more often than not, I get pulled away from my desk, and so I leave those trailing stops in there so that, if I was right and I do get those gains, it locks a portion of them in. But if not, then I set it at my max loss for what my risk is on that trade, and I let it roll with it.
In terms of like how to avoid these issues that we all talked about this entire evening.
Oh, we're going into that. Okay.
Just how to avoid just anything. Like, I mean, it's so easy we make it seem so easy by what we say, but what are some things that we can do?
Okay, so we've talked a lot about like the things that we as humans kind of are wired to do. We let winners not run, and then we let losers run.
Okay.
So there's a few things we can do to avoid that. What I found very good to do would to be, you want to play something. You don't want to have like one entry and one exit, so it's better to have like at least like two contracts instead of one if you have to scale down or pick a different level. And if you were playing futures, you would play minis instead of micros, or micros instead of minis.
Yeah, so you can have more than one.
So you could have more than one. So this means that you can scale out. What I like to do is when I see it pop, I like to sell a couple contracts and then move my stop up to break even.
Mm-hmm.
And that means I can never lose the trade, or I like to just sell a few and leave the stop where it is, and that means I always break even.
Can I ask you a question real quick? So in terms of like what you just said, with the scaling with multiple contracts, do you feel like someone's at a disadvantage only playing one? So like if you can't afford multiple ones,
I
just
do
kind
think
of
you
ignore
are.
that? Or,
Well, I think being able to scale in gives you like a better, I don't know if it's a bell curve or whatever, but it gives you a better consistency.
Yeah,
because you can like
really
kind of curve in.
Yeah,
You can scale out, scale in.
Yeah.
It gives you a better consistency instead of like like buying all at once will give you, if you're perfect, you will get way better gains.
Yeah.
And if you were to scale in and scale out, but I don't know anyone who's perfect at trading. So I think consistently the best thing to do is to slowly scale in and scale out.
Okay. So if someone really wants to jump into futures, but they want to play minis, tell them, no, don't do that. Go to micros, learn to scale with multiple contracts, get that going. Learn how to, and when you can afford to scale in with multiple contracts.
Yeah, if they can only afford one mini, I would highly suggest just to play micros instead.
And then
unless they're like
too, yeah.
Unless they're scalping, where it's like they're scalping a few ticks, but they should have enough range to do that. Like they should have enough money to be able to have a few losses.
Yeah. Also, always be able to use multiple. So you can't play minis, play micros. And if you can't afford more than one micro, like you probably, like, let's be honest here, like you need to find a way to make a little bit more money so that you can do that. So if you need $500 in order to take 3 micros, you know, go out, make $500 and then do this, like, because you're at a disadvantage only playing one at a time. And it's the same with options when it comes to that as well. You know, you can only take one contract of Boeing, or you can drop down and play something like Bank of America and take 5 contracts and learn how to scale out and work your way up to the point where you can take multiple contracts of Boeing. Because only being able to do one, you kind of really have to be precise on your entry, and you really have to be precise on your exit. And that's kind of like what the small account challenge is all about, is like you have to be precise. And some days you get $3 gains, some days you get $15 gains. And I think that's the main thing is I think scaling comes down to being able to afford that. And if you can't, find the instrument, find the tool that allows you to build up to the point that you can get that far as well. Do you guys disagree with that? Like, at all?
I would love to disagree with you, Tim, but I kind of agree with it.
I like that. That's great. But I think that hits on all the points that we wanted to talk about tonight. We had you know, criteria for entering. We talked about that. How to let runners go. You know, like if setting targets is beneficial. You know, do you enter a trade before you know, or enter a trade knowing where exactly you want to sell? We talked about scaling. We talked about avoiding these things. I think we really hit everything. Do you guys feel like there's any other topic that we missed upon when it comes to trade management?
No, I just want to clarify myself, because when I said, did that really answer your question, and it didn't really answer your question, the reason that I brought that up was because I've said it before and I'll continue to say it. I'm still a very emotional trader, and I have a hard time taking my emotions out of it.
Yeah.
And that is what makes me very subjective to these things that Ham brought up before, and the things that we talked about. And what I have found to be the best way for me to eliminate the emotional overholding of positions to, you know, I hope it's going to go back up, and just, I like calling it trading on hopium, but from
risk aversion, loss aversion.
Exactly. Yeah. The way that I have started incorporating in myself until I can minimize that emotional side of things is using those trailing stops, because, you know, once I put that in there and I leave it, like, yes, there's many times where I could have made more money off of it, but it's helping me take that, you know, aspect outside of my own self, because I've already locked it in there, and, you know, kind of, I don't want to say whatever happens, but it takes a lot of the emotional side away from me, where I'd be like, oh, well, yeah, I should sell it here, but I think it's going to go down, you know, maybe 2 more ticks and then go back up. Like, that's what has helped me immensely.
The hardest, I've said it again, the hardest part of trading for me, out of all the logical fallacies that I went over, is the regret aversion, where I don't want to sell here because I think it's going to go.
Yep.
Yeah.
Yep.
And it's definitely
hard. It is so hard.
And, you know, I want to make the point, too, that it's I would say even more difficult for somebody that's not in your position, Ham, that, like, specifically people that are trading on these apps like Robinhood, or
oh my god, dude, I tried that for this week.
I know, and you made
most
people make
welcome
on Robinhood,
to hell.
so let's not even go there.
I can't do it. I tried it for like a week.
That's all it can be.
What a shitty platform, man. Oh my.
My reason for bringing that up, though, is that if somebody doesn't have $25,000 in an account and they're restricted to these day trading rules, I think that until people have a larger account, it's really hard for people when you have 3 day trades that you can make in a week, and these people see, you're going in and you're making hundreds of trades a day sometimes. And, for somebody that's strictly using Robinhood that doesn't have a cash account or anything like that, they go in there, they make their trade. If they were wrong or it starts going down, it's so much harder to cut that.
Because it definitely is, because you're done for the day.
And that's the thing.
I know. Yep.
And so I think that's something that people need to be like super aware of, is if you're just starting or you're restricted to Robinhood for some reason, or if you're restricted by day trading for whatever reason, which most people are, that's something to be aware of. Like,
I completely agree.
I can
promise
you're
out for the day, you're done, and that makes you want to hold on to losers. That's the whole thing, man. I've been saying that for long. I've been posting that on Twitter. I've been saying that the PDT rule is to fuck us over, because so many people want to cut losses and re-enter a trade, but they can't because they're done for the day.
I think it's just. I mean, I understand the rule, but I think that it's at the same time. I think it's.
Do you think it's protective?
They're saying they're protecting us, but they're not, dude. Yeah. They are.
I think they aren't protecting people like us, but they are protecting the vast majority.
The only thing it's doing is hurting. The only thing they're doing is hurting people. They're hurting responsible people.
Yeah,
they are. That's the only thing they're doing. They're hurting responsible people just to protect people who are gonna fuck it up either way.
I think right there, hurting responsible people is a great transition point to one of my favorite topics, Furu of the Week. All right, so over the course of this week, we've had people message us. We've had people within our friends group that has been noticing certain activities that is Furu-esque amongst the FinTwit community. And we're here to call that out. Anytime we call this out, we genuinely extend an offer to them. So the people that we bring up today, we have DM'd them and asked them if they wanted to come on here and defend their position. We offer an incentive. If whether they want to disclose that or not, they can, but we give them a good reason to come on here to make them feel comfortable, and we tell them, we're not going to make this a shit show or attacking them. It's going to be just friendly banter back and forth. But no one responded, so we are here. And we have our
friendly banter, but we're not even friendly with each other half the time.
Yeah, maybe. All right, so I don't know. I think that's friendly banter, but to everyone else, it's
unfriendly. Again, it depends on what you mean by friendly.
That's true. So,
well, I'm sending you guys a Christmas present. We're pretty friendly.
That's pretty friendly. I'll take that.
I have my
you
person.
You could be a dick to me the whole year, send me a Christmas present, and we'll redo the next year.
We'll redo.
Jackpot.
All right, so I have my person that I picked out. I hear, Ham, that you have somebody else that's different.
I do, but I'm not so.
Just do it.
I'm not sure, but I'm gonna go with it just because I'm so confused. I hope people will comment and I'm curious.
Okay.
I'm just curious. You go first.
No, you gotta go first. I have my
be on the sidelines of this just because.
No. I'm going second because I need to have people
No, I'm gonna sit back and listen because I'm a pretty small Twitter, if I may.
Twitter.
Did you break 10 followers yet?
10 followers.
Bro, I've got like 100. Bro.
Yeah,
come on.
Get to know him, baby. Get to know him.
Yeah. Okay.
All right. Well, hold on. Are you really making me go first? Because I have mine all set up.
I kind of want to go last because I'm kind of pulling out.
All right.
Something that people might not agree with.
That's fine. So I'm going to try to get this up onto the screen itself. So if you're listening to this, we have Furu of the Week. I am picking my person that I got into a little disagreement with was Adam Massini, I want to say his name is.
Sounds like a turd.
I agree. He's a friggin' turd. So he has been boasting about... ES futures hitting his top of his channel that he had. I'm gonna post up the picture here in just a second of what it actually looks like. And it's just basically a random channel that has about a couple points of correlation that just doesn't make sense whatsoever.
Is that the guy who posted the range of on like a large chart that gave like a, technically the channel would give you like a 50-point range on the top and bottom?
Yes, so it was like a 50-point range that this could possibly freaking... I'm going to post it for you guys. I don't even...
That's like, yeah, that's unplayable. You can't really play that.
Yeah. And so,
like, yeah, bounce off here, but what do you want me to do? Like, play like 1 micro and hold it for a month? You make like $20?
Exactly. So like he was boasting about this, saying like, this is... oh, it happened, like it's going to do this, and I have specific criteria for why it plays to these channels, but we all know that no one does because it has a 2-point correlation. And if you do, you can, any 2 points creates a line, and if you only have 2, you know, there's nothing to it. So I don't get how the hell he comes up with his criteria here. I'm going to post it for you guys in chat real quick so that you guys can look at it. That's one of his things that he has, and then he has his general overall channel, which I have done. And the tweet is the one that we're discussing today, is the one that is going to be from December 5th, where he writes, this recent October 3rd to November 3rd XPX rally had an eerie parallel to the June 3rd and 30th rally. Both lasted 40 days between blah blah blah. It has a bearish RSI divergence. If the outcome happens to repeat, we're going to fall, and he's boasting about it left and right, and we all know that this is bullshit. That's what it is. So it's a channel that we have here, and it's simply just saying, as you can see, the points of correlation that are on there make absolutely no utter sense, but it's predicted the stop of trade progressions, this predicted the stop of global growth. You know, everything was just falling on this top of this Twitter or this channel line, and just magically stopped. And who knows, he's right, and everyone agrees to it for some reason. But that is my Furu pick of the week. That this
did he make the green lines on the divergence, or was that you?
No, he made the green lines.
Oh, yikes!
Yeah, the 2-point divergence that could be posted.
Look at the one on the right, man. It doesn't even contact. It's just like randomly floating.
Yeah, and you know, do you
the
look at the dates on that?
Left.
The middle.
The one
of
on the
June?
left is like random.
Yeah, the middle of June,
like you can make
all the way to August.
I can make inverse divergences for like everything you said right there.
Yeah,
it looks like trash.
Yep. So, but
yeah,
this was a very popular tweet, and it was something that was shared amongst a lot of people. And as this is, wow, this is amazing. It's 130 likes, you know, tons of retweets, everything. It was just, everybody agrees with this, and there's nothing there at all. And he has a 60-point range that this could possibly happen, and I think anybody with a 60-point range would blow up their account with that.
This is what I was talking about, the survival thing, where
it's just
the exact thing.
It's bullshit.
I know you guys don't like my my theories and stuff, but there was the survival thing where it's like the planes came back and they have all the bullets in one spot. They're like, should we put them there? Nope, we put the shit on the engine.
Yeah, because the ones
blah,
that came
blah,
back. Yeah, no,
they're the ones that come back.
Perfect.
Anyways, yeah, exactly. The whole thing, my point is that you're looking at things that worked one time, but if you go back and look at these charts that didn't work, they look a lot shittier than just pointing out a perfect thing that works.
Mm-hmm. That's for me. All right, so that's mine. I think it's utter bullshit that like we're gonna try to get.
I gotta go on mine.
Yep, we got it. So I want to hear what yours is.
My Furu of the week, and I'm slightly scared to call this out just because I don't want to look like an idiot, and not because I don't think he's trash or dumb, but I'm not sure if he's a parody or not. I'm calling out Shiloh. My Shiloh? What is this? My Shiloh trades?
Call me Shiloh, baby.
Call me Shiloh. So I'm calling him out. I'm not sure if he is real or not, because I don't want to call someone out who's like Ramp and he's a parody and I look like an idiot. Like everyone knows that he's a parody and I call him out because I think he's real.
Mm-hmm.
But let's just pretend that he is real.
He has to be real. Has to.
He comes out of like nowhere and says like 10 business day trades, and then like all of a sudden we pull back for like 2 days and then we bounce back. We're at all new time highs again. And then like, the fuck is happening? Like, it's just so dumb, man. And the best part about him is he has all these bots. He has like the Shiloh bots, he calls them. And he also has something called the order, like hashtag the order. Right. And he basically has like a shitload of, this is my theory, by the way. So he has like a shitload of bots that he like promotes himself, where like I've seen it, like someone makes a call and then like he comes in and says, no, Shiloh did it better. So like,
yes, I remember.
But it's just like weird because he has only 3,000 followers, but he has like 100 replies, like 100 likes, 100 retweets on like everything. So like, where the fuck are you getting these things from? Like, even people with like 50,000 followers are not getting these numbers. So like, he's definitely like running bots to promote himself, and then like out of nowhere, like I'm gonna do this kind of one-on video and teach people $700 or something, and then in the fucking retweets, he has all of his bots say, I'm so excited for this. And then all the noobs are going to be like, oh, wow, this guy's real. Everyone's excited for him. And they fucking buy into it. Like, this guy, like, I'm not going to lie. He's a fucking genius at scamming people. He's really fucking good at scamming people. But, I mean, yeah, you're a douchebag, man. Get some fucking respect.
So you genuinely... All right, so do you do or don't think he's a parody?
I don't know, man. I can't tell. I don't know if he's a parody, and I'm just gonna look like an idiot for calling someone out who's not real. I don't know. I think people are dumb enough to think he's real, though.
All right,
like me, I can't tell.
I'm gonna throw a nice little Messiah's own theory when it comes to this. I think that this could be a double agent type parody type shit that plays off of another person, and the other person I genuinely think that
would be TikTok. Yes,
I think it's TikTok. I do. It's just everything.
So the
wordage, everything is the same.
Okay, so yeah, the one thing that pointed me to thinking it was the same person, or it was a parody, would be that TikTok said 10 business days, and then so did Shiloh, 10 business days. So either it was a parody or the same person. It would be random to make like a call like that and say 10 business days, and then for the other guy to say that.
Yeah, that's what I mean. So either he's a parody of TikTok, or this dude is trying
TikTok.
He's TikTok trying to get a service or people to pay him because of these damn things. I don't know. I hope he's not a parody so we don't look like dumbasses.
Does anyone know anything more about this?
Please tweet us, message us, let us know.
I will say, though, from looking at all the things that Shiloh says, I don't think anything is useful. I would say no. I would never use him because it's just so broad, man. Like, oh, I'm going to come out and you should sell within 10 days, but don't short too early. Okay,
Right.
bitch, when the fuck am I supposed to sell?
On the 6th day, look towards the west.
And then, you know what happened? On the 10th day, we had a sell-off.
Right.
So, okay. So why didn't you just fucking tell me to sell on the 10th day if it's so perfect? If you have a fucking range of 10 days, why not just, like, what the fuck? It's so stupid.
All right, so that's what we're going to do, basically. We're just going to just call out the stupidest shit we see on Twitter for the week, and audience interaction with this, and letting us, maybe people we're not even following or anything else like that, send that information in. Let us hear that. Let us see some ridiculous tweet that was done. Like, we don't need to hear the penny pump floaters stuff because we already know that's bullshit. And
yeah, they're useless.
Yeah, that's just clearly them just trying to make people buy. But we're talking about like the actual people that like play real things.
Blue chips.
Yeah. Futures, anything, just whatever. Yeah. Whatever it is, like that's this type of stuff we want to hear. Also, let us know if Shiloh is a parody account because we don't want to look stupid.
We can't tell. We
can't tell. So let us know. There's not really much to report on the account challenge after this week. It's basically taking the vert that was on MCD McDonald's. I kind of explained that on Twitter with the importance of letting that data kind of fuel the lower strike. Other than that, going up to past the $100 mark in the Robinhood one, which I'm starting at $50, and then the TD one that's kind of slowly gaining back from that one Apple trade that's just kind of like haunting that account, and just kind of getting these base hits until things calm down and kind of get a trend going again, and it's not so headline driven. But this coming week, a few big events, so I'll probably be trading light unless I see an opportunity. So it could be, it could be big drawdowns, big gains, or depending on how I play, maybe even nothing at all this week. So we'll see though.